What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Starting a business is hard work. It's risky, it takes a lot of time, and you don't know how much money you're gonna make if you make any money at all. But to help you out, the government gives you some tax incentives to start a business, kind of like saying, hey, thank you for being an innovator. This one's for you. So I'm gonna go over some of the tax benefits of starting a business in America, and as always, I'm not your accountant and I'm not your attorney, so make sure you speak with a professional in your area so you understand all of your local regulations. First, you have to understand the order of operations of money. To do that, let's take a look at George and Nancy. So George works a normal job as a consultant and he makes $100,000 a year. Nancy owns a consulting company and she also makes $100,000 a year, and she is the only employee at her company. They both do essentially the same thing, except Nancy owns the business where she works at and George works at the business. They both make the same amount of money, but they're taxed very differently. George makes $100,000 and then he pays taxes on that. That's what the majority of people do. They make money and then they pay taxes on it. The United States has a progressive tax system, meaning that George will have to pay 10% tax on his first $10,000 of income, he'll have to pay 15% tax on the next $27,000 of income, and so on like that. But in effect, George will have to pay 21% of his money in taxes, leaving him with $79,000, and just to keep things simple, we'll ignore the state taxes. Oh, and just so you know, these percentages might not stay the same because Donald Trump has proposed a lot of changes to the tax system, but nothing's been approved yet. I will keep you posted, so stay tuned. After paying his taxes, George can now buy things. Some of the things he spends money on are his car, gas, cell phone, meals with his clients, a laptop, and he goes to Florida every year for a business trip. Let's say these things cost $20,000. That means after taxes and these expenses, George is left with $59,000 to himself. So when you make money from your job, the order of operations for your money goes like this. You make money, you pay taxes on that money, and then you get to spend that money on yourself. Nancy makes her money from her business, and so the government says, hey, thank you for taking the risk of starting the business. You can spend your money before you pay us anything. Nancy needs a car for work, she needs gas, she needs a phone, she buys meals for her clients, she needs a laptop, and she goes to Florida every year for a business trip. Wait, aren't these the same things as George? Yes, and because Nancy owns her business, she gets to deduct these business costs, or at least a portion of them, before she pays any money in taxes. So if these things cost $20,000, Nancy gets to tell the government, hey, I made $100,000, but I'm only gonna pay you taxes on $80,000. Now because she has less income, on paper, even though she made the same amount of money as George, she falls in a lower tax bracket. Now she only has to pay 19.5% of her income in taxes, while George had to pay 21%. That means Nancy pays a lesser percentage of her income in taxes, and she only pays taxes on $80,000 instead of $100,000 like George, all because Nancy owned her own business. Huh, not bad. So at the end of the tax year, George is left with $59,000 and Nancy is left with $64,000, even though they did the same work and had similar costs. And we've only begun to scratch the surface on deductions and tax strategies that businesses can take. Now, without getting too complex, I want to tell you that the amount of money Nancy will have to pay in taxes is going to depend on what kind of business entity she has. If she has an LLC, that means she's going to follow just what I told you because she will be paying personal income taxes. But if Nancy ran a corporation like a C corporation, then the tax structure would be pretty different. But I'm not going to get into all of that in this video because it's probably going to be changed pretty soon. So once the new business tax code is released, I'll make a video on it. The important thing to keep in mind is the order of operations for money. When you have a job, you make money, you pay taxes on that money, and then you get to spend it. When you have a business, you make money, you spend it, and then you pay taxes on that money. This is why businesses can be tax shelters for the people that understand how it works. So you can look at this and respond in one of two ways. You can be the majority and complain and say, wow, it's giving business owners an unfair advantage. That's so unfair. Or you can say, if this is what rich people do, maybe I should learn more about this so I can do what rich people do too. And here's a little secret. Not only do you not need a huge business, but you don't even need to actively work in the business to take advantage of these tax strategies. You can open up a passive business, meaning a business where you don't have to actively work and you can still get the benefits. Whoa, how is that even possible? The most common way people do this is by investing in real estate. You can open up an LLC, invest in property, and then hire a property manager to do all the work. That way the only thing you have to do is deposit your your checks, and then you still get the business deductions. Psst. That's why businesses can show losses on their tax returns so they pay $0 in taxes when they're actually profitable. It's fancy tax planning and it's 100% legal. Your deductions have to be business related, so make sure you speak with an attorney and an accountant to make sure you're doing the right thing, because remember, it's not how much money you make that matters, it's how much money you keep. So I hope this helps show you how you can keep more money. What's up everybody? If you enjoyed the video, hit that thumbs up button. And what are your thoughts on these business deductions? Are they good or are they bad? Let me know what you think and why in the comments below. And if you found this video helpful, please share it with at least one friend so we can help spread the word. Every week we release new videos on entrepreneurship, business, and money. So if you don't want to miss them, hit that subscribe button or hit this button right here, even if you're on your phone. Follow me on Snapchat and follow us on Instagram over here. And check out some of our latest videos by clicking these buttons below. And as always, keep hustling.